Welcome everyone to the Kendall Report. It is Monday night coming into Tuesday. Title of this video, Another Day, Another Decline. We continue to just get hammered here in the markets. There's just no uptick whatsoever. We almost traded to an R1 value in the live room today. There was a couple setups that looked like things might come into play, but they never did. Just relentless selling. We had an interesting day, though, just to kind of contrast, was very low volatility from the standpoint of how the order book was running, how everything was flowing in as far as the E-minis go. Of course, the banks, major banks were closed, the treasuries were closed, all that stuff happened. And, so I'm going to look at the treasury futures here tonight instead of how we usually go through the 10-year. But there is some aftermarket stuff and secondary market stuff that's trading, and we're pressing 4% again. And I'll get into all these details. Not a lot to cover tonight that I can find. No news tomorrow. There was no news today because everything was closed. So nothing really to report on. Really, all we can start to do is to build some kind of concept of what's going on here and looking forward to CPI and PPI that's coming out later this week on Wednesday and Thursday. So that's really the whole week's all about that. A couple comments I do have about what's going on is, of course, from the Fed, Brainard is actually going and just putting out more talking points today. Fed's not, it's data dependent, all of this stuff. We have to see the data, blah, blah, blah. They're going to keep raising rates. They got to break something. And we had some interesting conversations in the live room today. And I was actually we went over a whole hour today just because of a conversation we had at the end of the session. But the realities here of what we're dealing with is just a super bear market. And we're potentially looking at the bond vigilantes actually just destroying this market. And that was one of the things that came out of just hanging out in the live room today. Was reasonably chill, had a good day trading, all that stuff. So that part was good. I actually really enjoyed it because we just didn't have the crazy volatility and big price swings out of nowhere where we trade in 2 or 3 minutes where 10 handles or 12 handles of movement happened and nothing flat. So we had much more stable trading environment. The moves were smaller, but easier to capture, in my opinion. Just looking at notes here, looks like I've covered everything I need to cover here from the standpoint of what's going on. Let's go ahead. I didn't even write down the stats for the database. I'll just cover them live. We should be able to get through here. I think we're going to be out of here in under 30 minutes tonight. There's the session tomorrow. I'll set up in the technicals here, but we are sitting pretty close to a major tipping point in the markets, and the next couple of days are going to be important. I don't think anything's really going to happen ahead of CPI and PPI. These next couple of days are on Wednesday and Thursday will be the material days as far as what we have to deal with. So let's go ahead and take a look at the database. So we're at 17.69, virtually no change from yesterday. We had 175 new buys. We had roughly 313 sell signals. So we had basically a negative rotation again, but we're just hanging down here. That magic number that I watch for in these levels is around 22%. And we're just staying below that. And nothing material is going to change here. Tomorrow, like I said, I don't have high-level expectations of anything big happening from that standpoint. There's no news. There's nothing really to trade off of. The banks are closed. Maybe just watching the bonds trading and all that. Just let's go ahead and just get into technicals. I have some things I'll talk to you as we go through those, the next level here in a sec. Okay, we'll start off with the trading view and looking at the algos and what they're telling us are likely to happen here. There's still, it's interesting, there's still a bias, what is suggesting that there's a slight bias to a sideways trading range staying within the market grid. I'll go through those numbers here in just a minute. PPM1 is saying that we're going to try to turn up here, meaning that the 10-period moving average is going to turn up. But there's something interesting happen. We got some new Fibonacci downside projections here, which are crazy numbers. And a lot of times when we see this, and I'll just circle through a couple things to show you exactly what I'm talking about. When we get these big downward projections, they look pretty ominous, but in the real world, what they're looking like is really they don't ever happen, and this is a bit of an interesting scenario. So let me bring that up here and just see. You can see I'll draw some circles around here on these areas. So you see these downward projections, and now we have one coming in here. And oftentimes when we have these downward projections, which is the case at this time, we also have some upward projections above the markets. They were here. We have the same scenario right now. We still have upward projections. And typically what that means is we are still trying to put in just kind of a potential rounded bottom. But as I've said, the 21-period moving average is your absolute ceiling in this market right now. And I'll go through all of those numbers here in a minute. But you can see here, just draw through the expectations here is you can see the algos are trying to turn up as we go out 4 or 5 days from now. It doesn't mean they will, but they're fairly accurate. It looks like another day sideways, and looks like PPM2 wants to turn up a little bit. We'll see what we get tomorrow night when we come in. We'll take a look at all of this information. But what it really means, let me clear this out. What it really means is probably more sideways. We're likely to stay under the 10-period moving average for several more days. Right now, that number right now is at the 3684 level. I'll go through the market grid here in a minute. We'll go over to TradeStation, take a look at that. PPM2 is still negative by 0.65, suggesting there's less than a 30% probability to rally above the 3771 level. That's a long ways from where we're trading right now. We're trading down here at 3607 right now. So we're a long ways from printing any of these numbers. Let's go over to TradeStation, take a look there, just so you can see what we're looking at from this standpoint. So we're looking at the market grid. On the daily, we're looking at the potential for 3603 is S1. We've already printed 3604. We're down 17 handles right now on the session. The high has been 3636. That's funny that number comes up again. That was the number we were talking about. Do you folks remember 3636? That was the low once upon a time, going back into around June. We bounced around that 3636. So we continue to see these same numbers. So when we start to look at the markets on a bigger scheme, especially if I bring up a monthly chart, you'll see it looks more like a big sideways movement than what we're seeing here, where markets are trending up and down. And we looked at the monthly just the other night, last night actually. And so we're looking at the potential. If we get through this 0350, we've had a low of 04 so far, trading 0675. punch through that. The next level is 35.79, 35.55, and the old fib targets. I've got a different setting on the trading view that is a little more aggressive. But right now we're looking at 35.61. I talked a lot about that number last night. That's your next downside target. That's your next pivot. Below that, all of a sudden, you're looking at some pretty ugly numbers. And 34, and the new Fibonacci projections I just showed you are 32 handle. So things are, when they start to look this ugly, you start to wonder if we're getting close to a low. Yesterday, just taking a glance at the VIX is at 32.45. Typically, when we get above 31, you can buy the market, sell 20s. We'll see if that comes into play. But right now, like I said, the PPMs are down, but we're still expecting to stay within this grid pattern. So, but this is a big pattern. There's a lot of volatility potential here. So, like I said, below 03, S2 35.79, S3 35.55, which takes us down to fib target 2, and that's at 35.61. So we get, all of a sudden we've got these big 35 handles coming out, and we go back to what was the date on 10/3? We actually printed 35.71, so that'll be a number to watch for as well. I just don't think there's much there. And I see somebody commenting, now I wouldn't discount Jamie Dimon's comments today. I didn't go a lot into the economy. That was probably the other thing. Even though the bank was closed, Jamie was working. But just come up on screen here for a second just to tie all this together. It does, we're definitely heading into a recession. It's just a matter of when this jobs market finally hits the wall. And I think what the Fed is trying to do right now is get it to hit that wall and roll over. And if they can do that, they're going to be happy about that, right? But as always, chances are if they get it to that point, other things are going to start to break and the numbers go way further than they thought. There's no way easy to push somebody off a cliff, right? And that's what they're trying to, it's a cliff that they're coming up to. And they talk about soft landing. There's no mattresses at the bottom, and it's not a 10-foot drop. It's a big drop, and there's a lot of systemic issues going on in the markets right now, and the potential is for things to get really ugly. So, so just looking at this pattern, still negative. We're probably going to stay under the 10, like I said a few minutes ago. That's 36.90. That is all the way up at R3 for today. So I don't see us getting anywhere probably near that. 71 was print. 76 was yesterday's R2. And if we look at the value yesterday, we got up to 67. So we got about 9 handles away from R1 yesterday. If you recall, I was talking about R1 S2. We basically did R1 S2. We had a low of 36 even. We went just below that. It was actually a really good trade off of S2 today. And we bounced almost about 20, actually we bounced 40 handles off there. We traded, once we made the low at 36 even, we traded all the way back to 36.47 intraday after that. And then we just kind of waffled along around 36.20, 36.40 for the rest of the session. That's how it went. So now we come in tonight, we got more pressure on the markets. It just looks like more of the same. The best that one could hope for is sideways trading, doing, like I said, let me get over to today's numbers. We're looking at the potential of an S2, which would be at 579. That would be a retest of the 571 lows that we printed. So that's 35.71.79. If we get through this 03 level, and we're trading 08, so trying to get a little bounce here. Didn't really go into the algos and see what what they're looking like, but I think we'll do that before we move on here. Let's go back here. Let's go back to an hourly chart. This has been, for me, this has been a great chart to help project the next several hours. And last night there was a really good trade-off of this chart. I'll just show you the setup here. So the algos are suggesting that we're going to just stay sideways, that these moving averages are trying to bottom out here, which typically, if we look down at the algo on ppm 3, is suggesting that it's still going to be negative, but that resistance point is at 36.49, so that kind of falls into some kind of potential for R1, which would be 71, because this is an hourly graph, so it's going to continue to evolve and depend what kind of prices we get. But right now, it's just everything's still down. All the trends are even down on the hourly. There's nothing really to go for there. Okay, folks, been having this issue with TradeStation. If I accidentally click on this box, it's a disaster. I'll have to reboot to fix it. So hopefully, even if that happens, I'll just use TradingView the rest of the way. So let's go and take a look here at NASDAQ daily. Similar type patterns. PPMs are weaker as they have been for a while back. We continue to see much weaker profile here. The PPM 2 is still accelerating. Let's go over here. Let's put the NQs up here and just take a look and see what the algos are telling us. We'll go to a daily chart here real quick and set this up. One of the things that I've been using, and it's not released yet, but we're working on a release for this, is that we have this arrow here with a 4 under it. This is the STX buy signal. I talk about them all the time. This is daily buy signal. And so we did get an STX 4 buy. Typically on a daily, it's 5 is the magic number. So we're still looking for another low. But if we look at the targets down here, we've got 104.36 ppm, fib target 2, fib target 3 is 10,035. I talked about these numbers last night, but the algos are suggesting that we're going to get some sideways movement here. ppm 2 is being projected to go up N3, and ppm 1 is expected to turn up. Probably stay flat today, and then on Wednesday it's going to turn up. So does that mean that we're maybe going to get a better CPI number, or a number that we're going to get comments around that could trigger something of a positive tone? Regardless of anything and everything that can come out right now, these the 21 period moving average and all of these patterns on E-minis, on the S&P, and on the NASDAQ futures is going to be the peak value there, and that's going to be right at, on the NASDAQ, 11,560. Of course, that's a long ways from where we're trading right now, but that would be the peak value, and I still think there's even enough downward pressure here that 12,288 is going to be pretty much where this market's going to hold there. So expect all that to come into play. Let's just stick with TradingView here. I'm worried about using TradeStation. It's going to blow up on me. Let's look in here. We also got some new algo targets here. This is RTY. So looking at the futures here, and we're looking at 1516. This number was out yesterday. I talked about it, but once again, it's different pattern on the Russell. The Russell's suggesting that we're going to still keep a negative 10 above here. So around 1740, 1750 is going to be pretty stout resistance. Look for rejections around there. But what we're really, just like with all the markets, we're looking like we're going to stay just within the context of the grid. So there should be over at least for Tuesday, mainly because there's no news. There's really nothing coming out, maybe some talking heads in the Fed or maybe some other noise that could come out of the news lines, but no official economic news of any sort coming out. And so what I'm looking at there is that we're probably going to just trade in a sideways range. The 10-period moving average comes right into R2 on the RTY. So we're probably going to get somewhere between R2 here, maybe an S1, but the grid should be awesome, I think, on Tuesday to trade off of. So those of you that are trading intraday and you have the indicators, you should be able to use these grid values and really nail some good profits there. That's, I think, will be the place to trade today. I think Tuesday is going to be a trading day. I don't see any way you can take any positions ahead of these big numbers. I think you would be silly to do anything of the sort. All right, so I put the treasuries up here, but this is the notes here on the treasury. This is the futures, and we did hit a fib target too. And like I said, just looking at the aftermarket, we're printing around 398, so we're trying to press 4%. I'll go back over to TradeStation here in a minute just to remind you of some of these numbers. And let's go over there real quick and just bring that up. And what we'll see here, this was a crazy number. We found this today in the live room, and there's some new Fibonacci projections for the treasuries, the 10-year treasury. Okay, you folks sitting down, get ready for this one. 503, 559, 538. I'm going to draw something in here. This was a conversation we had in the live room today, and I think maybe you'll find this interesting. We sure did. Let's take a look at this. Well, I'm going to draw some circles around some of this stuff, because really what these targets come in, we're talking about this target here, and then also about this target, and then we have these big targets. What happens a lot of times is this one I want to point out. These targets will come in and they won't get hit in this sequence, but they're still valid. And then if we start to target over here, we're still a little bit below. This is 412, and this was right in here was some of the values where we get into a 371 print there. And so what happens a lot of times, we'll get these elevated levels, and even though they don't get hit within that sequence, the values of that pattern still maintain and go forward. So I want to blow these numbers off. That 503 on the 10-year is ridiculous, and it just may be one of those projections that never get hit. That's highly possible, but I have to acknowledge them because they come out, and it goes back to, if I hadn't going back to 2021, over a year ago, and I was talking about the Dow going to 113, and everybody thought I was crazy then. That was a projection like this. So our yields going to 5 based on if inflation doesn't get underhand. Absolutely. These are not unrealistic numbers. What they are, though, are much in the future, so they're not going to happen tomorrow. That would be a complete derailment. It would make the situation in the gilts look like a joke if that happened. There's not going to be anything anyone's going to do if that happens. So just a quick comment about some of the bond vigilantes showing up. They're salivating for a moment like this, and if this happens, then a lot of stuff gets broken if this happens. And I think a spike up to yields like that would probably throw us into a massive deflationary period. And especially if they didn't just spike, but if they went up and stayed up, that's going to be a real issue. So I think the Fed has a real big problem, and I don't think it's very, very controllable at all from that standpoint. I just don't see the values here from the standpoint of what they not the values, but what their alternatives are, what they could do to change the outcome. Are we going to 5%? Maybe. That's very possible. I've showed you several times, and I'll do it again when it's appropriate, what my expectation of yield curve, but all of a sudden these things are starting to blow up where the back end of the yields are really starting to get hammered really good. And that's what those, the futures, let me pop back to the futures and I'll go full screen. The futures are suggesting that we're going to potentially come all the way down to 109 down in here. And that's a very big number. We're trading right now at 110, 270. This would be a pretty ugly number down on the 10-year, but that's what's being projected. So we'll continue to watch this stuff as it unfolds. But it just, this is a scary moment, because the other thing, I'm not going to cover it tonight, but the other thing that we need to watch out for is the dollar and whether it prints over 117. That's why I think that you have to watch that level really closely, because that starts to break all the emerging markets. That breaks everything. So, like I said before, I strongly believe that the Fed wants to break something, and they're hell-bent on doing so, and they might break more than they are bargaining for. And I was around when Paul Volcker I started in the markets in the fall, actually September of 1979, so officially 43 years ago. And I can tell you that coming into January, Reagan had been elected and Volcker was already in play. Jimmy Carter put him in. And what was about to happen was insane, because they jacked rates all the way effectively up to 20%, 21 on the Fed funds. And Volcker was hell-bent on doing and getting rid of inflation. We couldn't be further away from that scenario. So I won't go super deep on this, but we are not in the same position as we were in 1980 and coming out of stagflation and all the crud that came out of the Carter administration. We're much different. The debt levels that we have on a relative basis, GDP to debt, I think 138 now. I could bring up the debt clock and we could look at that, but it's big, big numbers. No one's ever seen anything like this before. No one knows what to expect from if something does break, and you have a Fed that's totally incompetent. They have no clue what's going on. They told us about transitory inflation. Everything they've told us have been wrong. And I've mentioned this before. If you go back to the dot plots, if we go back to the last meeting, go 1 year ago on the same meeting for the Fed, not one of them had a dot plot above 0.75 in yield. And we find ourselves at 3.25. So nobody has a clue what's going on. These guys don't, especially these guys. And we're all, I don't know if we're trusting. We're at the mercy of these people and what they do. And that seems to be the story and some of the realization of things that we are seeing in society now. We're at the whims of people making decisions for all of us, and they don't seem to be making very good ones. Not the ones that they're not worried about the things you and I are worried about. Let's put it that way. So who knows what comes out of this? Very critical stage. Meanwhile, we got geopolitical some really bad potential in geopolitical world with the war in Ukraine, and what people are talking about doing there is just crazy, completely crazy. So I won't go any more in depth than that, but we're definitely at this inflection point, and a spike to, this all came out of a spike to 5% or greater on the 10-year would be a disaster. You think about if maybe if we start to see crazy numbers, I'll bring it up, but they're really looking at the potential what it would do to debt payments, repayments, and it comes in this sort of bond vigilantes are laying there, not very low anymore. They're definitely in play, and they're going, if this thing gets to that level, then everything breaks. The U.S. is not going to be able to finance their debt, and the whole thing rolls over. And I guess then it really is the great reset. We reset everything from zero, and they have a lot of stuff to make up. And they might already have a lot of stuff made up, maybe digital currencies. Maybe this is part of the plan. I'm getting a little deep here, but I think that there is a plan, and we're not sure what it is, but if their plan may not work, maybe it does work. Maybe in hindsight, 10 years from now, we go, wow, that was brilliant. I'm not sure that's what we're going to be saying. All right, next, crude oil. Crude is trying to stall out here right around the 200-day moving average. That number is at 91. We're trading 90.91, trading right at it. We are seeing some pretty good acceleration. PPM1, 1.46, 0.20, 0.15, just about at trend level. So I'm going to go back over here to Trading View and look at the algos here, and I just want to see what kind of projections we're getting out of the algos as far as the trend goes. Now we have a really critical, I've talked about this 92 level. Right at 92 we have a pivot number, and a break over 92 would suggest much higher prices. What's interesting is PPM1 is saying that in the next couple of days that we're going to move up. In fact, I can estimate what the algo is telling us, that the PPM1 is going to end up at roughly a 0.35. And we're working on an error factor right now, trying to get to the point of figuring out, here's what it's estimating, what is the actual when it happens. And even if it's 60% of that, we end up in trend mode, which tells you that the 10 starts to turn up. Right now it's major negative, and this is by the way on an hourly chart that I'm on. Okay, just so you know. Let's flip this over to daily. I thought I was on daily, so we'll reset this. I apologize for that. But that scenario just talking about is over the next several hours. So let's take a look here, and here that was 200-hour moving average. 200-day average now is just correcting that, is right here at 90, at 99, 99.09. PPMs are actually on a daily starting to project that we're going to stall in here. So we should see some sideways movement. Use the market grid. Those of you who have the market grid for on the indicators, and you can use that to see exactly. We should stay within those parameters, maybe pushing R1 S2 kind of configuration. All right, we'll stick with the next. We'll do gold, and gold is rolled over. I talked about how with the dollar going up, it's just not going to follow through. 1728 was the magic number. We actually traded 1738 about 4 or 5 days ago. Now we're seeing algos are turning over. We're seeing that PPM1 is being projected to roll over and to go into trend mode down. And we have some new Fibonacci targets down below here, which are right now at 1672. Let me get this. There we go. 1670, 14, 1566, and 1540. So all of a sudden, once again, we're rolling over, but it looks to me that we're going to stabilize after a couple more days down, probably get to fib target 1, maybe as low as 1630, 1615 should be about where we get to. All right, next we'll go to Bitcoin. Bitcoin just continues to hang around this 19,000 level. We continue in a sideways mode. This is daily. We do have some downward projections right now for a move to 18,556. That's one of the key numbers there. Get through that, all of a sudden 17,820 and 17,429. So we're starting to see it get a little heavy. The algos are projecting that we're going to see more downside pressure coming into this. And that looks like to be the next. Let's go to a weekly chart here real quick. So I got all these crazy projections. It's blowing up the chart here. Bear with me a second. So we look at, this is also very interesting because it looks like we've got a few more, maybe another week or so of stability in this pattern. We got the market grid turned up here, but it looks like we're ultimately maybe sideways, staying under these moving averages, which are all in trend mode, big time trend mode. PPM1 is a minus 0.19. At its best projected, it's actually saying that it could turn up. I don't see that happening. But if it does, we'd have to trade above 21.2 to get it there, and I just don't see that happening at the moment. I think that daily charts are pretty vulnerable here at the moment. We do have some upward fib projections up here that are hanging out at 33,000. I've mentioned these before. It just looks to me like we're kind of caught in this pattern. I just want to open these webs up a little bit. Yeah, we're just getting into really this is still a very negative pattern with things looking like they're going to accelerate. Okay, folks, that'll do it for tonight. I appreciate hanging out. I got a little bit behind the schedule today. Today's been one of those crazy days, so hopefully we'll see you tomorrow night at the same time. And I really appreciate everybody hanging out and watching these videos. Make sure you subscribe, hit the like button, hit the notification bell so you know when I come live. I do these every night. Most of you know that. All right, folks, have a great evening. Have a good day trading tomorrow. We'll see you same time tomorrow night, same place. Thanks a lot.